Hello everyone, welcome to the Trend Analysis channel. So in this video, we're going to look at stage 3 analysis or stocks which have made a top or stocks which are in distribution phase. Now this is a technique by Stan Weinstein. So in case you haven't watched the stage 1 and stage 2 analysis, do check out the videos that I have on my channel. Okay, so let's get started today with the stage 3 analysis or the distribution phase. So this is the phase that we're going to talk about today, and the next phase, which is the last stage, would be discussed in the next video. A quick recap on the strategy itself. So this is applicable only on the weekly charts and also a long-term investing strategy, not a short-term trading strategy. Okay. Also, the tools are very simple. You need a free TradingView software. Just go to tradingview.com and you'll find it. Moving average and volume indicator. So let's get started. First, a short recap on stage 1 and stage 2. In stage 1, the rule is that the stock is going sideways. 30-week moving average is going sideways, and the stock is basically consolidating for the last many months or so. Stage 2 is nothing but the stock starts rising, the 30-week moving average starts rising, and the stock has broken out from a very long stage 1 consolidation with volumes. That's stage 2. So today, the stage 3 is the top or distribution phase, where the stock goes sideways and it starts dropping eventually into a stage 4 phase. So some rules, let's start discussing. So the first rule is the 30-week moving average starts losing momentum and it starts going flat. So here, if you see in stage 2, the moving average actually has been rising steadily and then it starts going flat. If you see this stock here, the moving average of this stock, 30-week moving average, has been going completely sideways here. Now, what this means is that the buyers and sellers are in a similar strength situation, a similar equilibrium, and this is almost similar to the stage 1 moving average, where we had almost a flat moving average, right? It's almost same, where the buyers, neither sellers had upper hand, and both have almost a phase of equal strength of buying and selling. So basically what this means is, when the stock rises, there's so much of selling that the stock falls down. Again, there's so much of buying, the stock rises, but again it meets selling strength here, and again the stock drops, right? So it keeps forming this continuation pattern. It goes up, comes down, goes up, comes down around the same range, and then it eventually drops. So hence the moves are very choppy and violent on both sides, and also the price goes back and forth around the 30-week moving average, right? This is the 30-week moving average. So stage analysis always is 30-week moving average. Now the most important thing to note is, at least if you've experienced this in the past, there'll be a lot of friends talking about a stock, especially that happens when the stock has reached a top phase where there's excellent fundamental stories, the stock is doing wonderful, there's been a great demand, and a lot of these kind of news, and everyone starts talking about it. News channels start flashing news all over, and that's the phase when the stock is having this kind of a movement, right? So you need to be really careful, and you should ensure that the stock, after so much movement, the stock should not be bought at this kind of a phase. Even if you're a trader, I'd not buy the stock at this point, where the stock has a 30-week moving average going flat and the stock is whipsawing around the 30-week moving average. So one of the other rules is, what you should not do is, you should not be buying the stock when 30-week moving average is flat, and don't get fooled by all the positive news that's happening around. But what you should be doing is, as an investor, you should already start trailing a stop loss around that low, around 30-week moving average. So here finally the stock came down and again went up. So once it forms a low below the 30-week moving average and rises again, you need to start marking that point, and that should be a stop loss for you to exit. Now also, one of the other ways to do is, you can also book partial profits, so that you keep at least part of your profits safe, and then remaining profits you can see, because sometimes what happens is stock kind of whipsaws and then it again eventually heads higher and higher and higher. Now, that can also happen. So in case you do not want to miss that move, which might happen sometimes after this kind of a phase, so try to keep some partial money still in the stock so that you don't miss that move as well. And finally, once the stock breaks below this, which after this flattening phase of the 30-week moving average, try to find a swing low, and once the stock breaks, that's the point you have to exit the stock. Now another important point is, in this phase, it's sometimes you might also see some strong volumes like this, and the stock might still not head higher with such strong volumes. The stock might still go sideways, and that's also a point where you might have to be careful, because when there's such a huge volume, the stock either should go up or should crack down, right? So if they just go sideways, which means the stock is probably just getting distributed from big hands to small hands. So Yeah, that's what I wanted to say with this. And there's also a note: there's every chance the stock might whipsaw and head higher again, as I mentioned. So that's always part of the game. So this strategy is also not a foolproof strategy. So sometimes it works, sometimes it doesn't work. Okay, but you also have to take some examples and see how it worked in the past. So let's discuss that here. So this is the example of RT drugs. So if you see, this was stage one where the moving average was almost flat, and then the moving average started trending up here. So we had a breakout from stage 1 to stage 2. The stock had a massive run up. It never even came close anywhere towards 30-week moving average. But then the stock started going sideways, and then it came below 30-week moving average. 30-week moving average started flattening. That's the phase when stage 3 is almost probably there, right? And the stock starts whipsawing around stage 3 here and here. So your most important thing that you have to do here at this point is mark that low and exit when the low breaks. Now that's very, very important, right? That's a case of RT drugs where the stock never came to 30-week moving average, but then started going sideways. 30-week moving average started consolidating, and the stock eventually breaks down. The next example I want to take is Neuland Laboratories. Now again, here we had a flat, a downtrending 30-week moving average, which is stage 4, and then we had a flat moving average here, which is stage 1, and then we had a rising moving average. The stock kind of went higher and higher, and you trade a stop loss here. Now this is complete stage 2 here, right? And then finally the stock went sideways and broke down below. And this also is a break of the previous pivot low. Now ideally you should have exited here if you were following the stage analysis or the simple higher high, higher low strategy. Now, the last example I want to take is also Deepak Nitrate, because as I said, sometimes the strategy whipsaws you. I want to also show you an example of sometimes what happens. Now, here in this case, if you see, there was a stage 3, the stock kind of was rising, and then the kind of stock whipsawed, and then it eventually broke out. Now, this is what I tell you. You should not be completely selling off, because sometimes you might think this is, stage 3 and stage 4 will follow, but the stock does the reverse sometimes. But here the stock broke out and it went again. They were 30-week moving average started rising. The stock kind of kept hugging around 30-week moving average, and eventually we had a breakdown here after a whipsaw around 30-week moving average. So it's very important to know that every strategy works sometimes, does not work sometimes. So here in this case, if you had exited here, you might have missed a great bull run in Deepak Nitrate. And in case you think the stock is again going to break out, you need to ensure that the stock is bought only when it breaks the pivot high over here. Always consider the pivot high on the weekly charts. In case you want to buy, it has to cross the previous pivot high. That's the best time to buy any stock here, right? In case you bought it here, you made a great gain over here, you exited over here. Now, same thing if you want to buy, you buy it over here again, right? Volumes are good, but we still need to break the pivot highs in order to enter stage 2 move up. So that's it for today. I want to discuss this stage 2. I hope you liked it. In case you did like, do subscribe to my channel and like this video as well. So otherwise, I'm going to leave you here. Take care, stay safe, trade safe. Until I see you in another video.